Hello everyone, and welcome back to Candlesticks. Today, we're diving into a crucial aspect of the stock market that you might have heard about but might not fully understand: circuit breakers. These are mechanisms in place to help maintain stability and prevent extreme volatility in the stock market. In this video, we'll break down what circuit breakers are, how they work, and why they are essential for the financial markets. Let's get started, but before we delve into circuit breakers, make sure to hit that subscribe button and ring the notification bell so you never miss out on our informative videos about the financial world. Now, let's jump right into it. At their core, circuit breakers are automatic mechanisms designed to temporarily halt trading on stock exchanges during times of extreme market stress. They were put in place to prevent panic selling or buying, and they play a crucial role in maintaining market stability. Let's break down how circuit breakers work in a step-by-step manner. First, there are trigger levels. These are predefined percentage declines in a stock index, like the Nifty 50. When the market experiences a rapid decline and hits one of these trigger levels, the circuit breaker is activated. Once triggered, trading is halted temporarily. This pause can last for different durations, depending on the severity of the decline. This cooling-off period allows investors to take a step back, assess the situation, and hopefully reduce panic-driven trading. After the cooling-off period, trading usually resumes. However, there are additional circuit breaker levels that can be triggered if the market continues to decline, leading to further trading halts. Circuit breakers serve several crucial purposes. Price stabilization. They help prevent rapid and extreme price swings. Risk mitigation. They reduce the risk of large market crashes caused by panic selling. Market integrity. By providing a structured response to market volatility, they help maintain investor confidence. So, there you have it, a breakdown of circuit breakers in the stock market. These mechanisms are vital tools for maintaining stability and preventing extreme volatility in the financial markets. Thank you for joining us today on Candlesticks. If you found this video informative, don't forget to give it a thumbs up and share it with your fellow investors. And if you have any questions or topics you'd like us to cover in future videos, please leave them in the comments below. Stay tuned for more insightful content, and as always, happy investing.
This has been Praveen from Candlesticks, signing off.
Hello everyone, and welcome back to Candlesticks. Today, we're diving into a crucial aspect of the stock market that you might have heard about but might not fully understand: circuit breakers. These are mechanisms in place to help maintain stability and prevent extreme volatility in the stock market. In this video, we'll break down what circuit breakers are, how they work, and why they are